Well, let's focus on the, oil and gas and power and utility space. The sector has been buzzing for no small reason also because a lot of them are, many of them are in the PSU space. Harshvardhan Dole is Senior Vice President in Institutional Equities at IIFL. He's with us right now. Harsh, great to have you with us here. Good morning. Thanks for your time. Prashant this side. How much of this is the PSU rub-off effect? And how much is it actual sort of underlying fundamentals? It's slightly on the lighter side, but maybe there's a ring of truth to it, Harsh. The stock performance we are seeing.
Hi, Prashant. Good morning. Prashant, last week we put out a detailed note on the power sector, and the theme was don't miss forest for the bushes. And the underlying theme was the whole power sector has entered into a massive mega Capex cycle, which will span perhaps for more than a decade. And were that the case, stakeholders across the chain will significantly benefit. And there will be multi-year cycle in terms of earnings upgrades, leading to secular growth for some and cyclical growth for some of the stakeholders. And looks like the theme is playing out fairly well. And as might case be in most of the times, some stocks might price in the growth upfront and then they will consolidate, while some will take some time to re-rate. So in general, we are fairly bullish, regardless whether it is a PSU or whether it is private utility. We are quite bullish on the whole space.
And Harsh, when you say a decade-long upcycle, we are, to be sure, because renewables in any case is the big focus, we're talking about coal, thermal. That's the upcycle, right?
Coal, renewable, all put together, I think there is going to be massive investments across the capacity.
No, specifically coal, Harsh. How much of that?
Yes.
I remember the power minister, Mr. R.K. saying I think it was a month and a half, 2 months back, at a conference in Delhi, he had said we need, I don't remember exactly now, I think, but he said some 40 gigawatts of additional new thermal capacity, which needs to be built.
It's 88,000 megawatt. So in fact, we were also pleasantly surprised that the government has, sooner realized that India needs a lot of thermal capacity as well. And they are kind of nudging all the PSUs as well as the private sector to kickstart investments in coal-based assets. There is a call to put out 88,000 megawatt of capacity over the next decade. And that's assuming 500 gigawatt of renewable comes in. If there is a delay in terms of adding renewable capacities or pump storage hydros or essentially battery storage hydro system, I think the reliance on thermal power will also go up. So to that extent, to us, 88,000 megawatt is a base case number.
So that is 88 gigawatt. So, I'm widely off. I said 40. But Harsh, so when you buy something like a NTPC, is it a bet on thermal capex? Because typically that's how you would think. But they've got a large renewable portfolio which they're building out aggressively as well. So what are we playing for?
Well, NTPC are playing for both thermal as well as renewable because over the next decade, NTPC is in the base case set to double its capacity by adding thermal as well as renewable capacity. So if your capacity is compounding at 7 to 10% per annum, earnings typically will compound much more than that. So it's a play on both coal as well as renewables to me.
Harsh, morning. Can you put the valuations of these companies in context? NTPC, Torrent Power, Power Grid, what they stand at today and what the historical level is, and why one should be comfortable with the fact that today they are trading higher than historical levels. So just put in context the valuations today and how one should approach and look at these valuations.
Well, there's no denying that some stocks, even on FY25 and FY26, if one were to make a buying case, may not offer you returns which are more than cost of equity, maybe over the next year or so. But that's typically the case. For example, let's take NTPC. At 80 rupees, it was trading at 0.5 to a book and a dividend yield which was double digits. Now the valuations are nearing 2-time book and the dividend yield has compressed to say 4.5%. Well, is this a reason to sell the stock? In my opinion, no. Probably stock will consolidate here, maybe for next 6-8 months, and then resume the upward trajectory here on. Same is the case with maybe Power Grid, which is trading probably a shade more than 2-time book. And Torrent, which seemingly is the most expensive in terms of price to earning multiple and continues to surprise in terms of earnings, may consolidate here for maybe 6-8 months only to resume the upward trajectory thereafter.
So here and now, what does one buy?
I think from a sectoral perspective, NTPC is our top pick, followed by Power Grid and Torrent Power. These three are the names that we like the most. If somebody is willing to, bear in volatility, I think Tata Power also offers a good, bet. Probably a 10-15% correction in the stock price, and you're looking at a formidable renewable play in the sector. But yes, the stock will tend to be fairly volatile, and it's not for somebody who's looking for an annuity return.
Yeah, fair enough. But those, Power Grid and the other ones, you were saying that could go into a consolidation for 6-8 months, right? And then resume because they've already done so well. Got that. Just a quick word on BHEL. 30 seconds, Harsh. I mean, a lot of, some believe it's even in the wildest possible, whatever you build in, it can't justify where it's trading at. And there are others who say, well, there's more here.
Prashant, to qualify, I don't cover BHEL, but looks like, the stock has been doing well based on the PSU order flow. And if that were to be the benchmark, I think there is far more to come in terms of order flow.
You do cover oil marketing companies. Is there more upside?
I think there is best is yet to come. If the oil remains anywhere between 75 and 85, there is going to be spate of earnings upgrade over the next 12 to 18 months. And the multiples thereafter will look seemingly cheap. So BPCL, IOCL continue to be the most preferred picks in our sector. We strongly reiterate buy.
Thank you for joining in.